following content is a technical analysis on Interactive Brokers, a company of the financial services sector in capital markets based upon the daily interval where I had mentioned here on the 20th of September 2023, where trading spot price 90.80, where we had a significant rise into the close at a 1.3% gain on the day, hovering right back into this primary major reactionary uptrend line called the bottom of this wedge with negative divergence, beautiful divergent high, multiple indicators with bearish divergences amongst all three technical momentum indicators with confirmed bearish crossovers there, offering a great risk reward ratio move to the downside. And we had some news rock the headlines of Interactive Brokers with recent sales by insiders that has sparked curiosity, particularly in light of the absence of any insider purchases within the past year. And upon examining the insider transaction history of Interactive Brokers, it reveals a pattern of no insider buys and 64 insider sales over the course of the year. And here's the update. For the entirety of that trade, right back up to that key inflection point, hovering in on a beautiful, perfectly back-tested rejection of that primary uptrend line off that bearish wedge pattern. And that was good for an 11.6% crash to the downside, double-digit closing below the 80.49 price support, significant major price support level called a multi-year price resistance. Upon taking out and closing below the 86.25 price resistance, backtested 2 days in a row and completely gapped down. Went on to backtest the 200 and 200 exponential moving average 2 days in a row, and it was off to the races on a big move to the downside, undercutting zero line thresholds with pure infused damage within all technical momentum indicators, with the oscillator histogram starting to print much larger red candle closes below its zero line threshold in a moment where bull traders and or long traders hope for the whipsaw-like reaction and or bear trap to retain and recover the 80.49 price resistance, really at all costs, to avert further selling damage back down to the 74.25 retest on an additional 8.8% crash, down to 70.78 for 13% crash, and then ultimately a backtest, retest of this primary reactionary uptrend line for a 15.5% crash, and that will be the biggest key pivotal inflection point, call it a multi-3-year price support level off the COVID crash lows here, with a multitude of reactionary lows really across that sphere, and that would be the ultimate buying point and or long risk reward analysis in the ratio arena to the upside if and when we go on to revisit this key inflection point correlated with the 70.78 price support level. These are your additional levels to dollar cost average down if you're a firm believer in Interactive Brokers.